As of 9:40 a.m. Eastern Time, Bitfarms Ltd, trading on the NASDAQ under ticker BITF, is currently at $3.39.5 per share, a staggering drop of 14.9% on the day. The stock opened at $3.46, briefly tried to hit $3.52, and has since fallen to a low of $3.39. This isn't just a minor pullback, this is a significant intraday collapse, and it's happening on heavy volume that's already tracking at 1.84 million shares in the first few minutes of the session, building on yesterday's already elevated volume of over 52 million shares. Now, the immediate hook, the thing that traders are seeing on their Fidelity and Robinhood accounts, is that this collapse is happening in spite of Bitcoin holding strong, trading around $105,000. And that's the first disconnect, the first sign that the reality of this stock is diverging sharply from the expectation. The common narrative for Bitcoin miners has always been simple. They are a leveraged bet on the underlying asset. Bitcoin goes up, miners go up more. Bitcoin goes down, miners fall harder. It's a high beta play. That's what everyone believes. But today, that belief is being broken. The reality is that Bitfarms is trading not on the price of Bitcoin, but on something far more specific, and for many investors, far more terrifying: its own fundamentals. The entire crypto mining sector is under intense pressure. Just look at the peer group. TeraWulf, another miner, just reported its own Q3 results, and the market reaction was brutal. TeraWulf missed estimates, and that miss is creating a wave of contagion, a sell first, ask questions later mentality across the entire space, hitting Bitfarms, Cipher Mining, and CleanSpark. This is where investors get into trouble. They buy a stock like BITF, perhaps on SoFi Invest or through Schwab Intelligent Portfolios, thinking they are getting a simple proxy for a commodity. What they forget is that this isn't a commodity. It's an industrial-scale business with massive capital expenditures, fluctuating energy costs, and intense operational competition. It is not, as some believe, a tech stock like Apple stock or even Nvidia stock. It is an energy-intensive industrial operation. The real story, the elephant in the room that is driving this 15% nosedive, is what's happening this Thursday, November 13th. That is when Bitfarms is scheduled to report its own third quarter 2025 earnings. And after watching a competitor like TeraWulf stumble, the market is now pricing in a disaster. The expectation was that the high Bitcoin price would cure all ills. The reality is that the market is now fixated on operating costs, hash rate efficiency, and most importantly, the balance sheet. This is where the story gets incredibly complicated. In October, Bitfarms announced a massive $500 million offering of convertible senior notes. This is a debt instrument. And while it secures capital, it also creates an overhang. Investors are now desperately trying to calculate the potential dilution. What is the conversion price of those notes? How many new shares will be created and at what price? This single move, while necessary for growth, told the market that the company needed a significant cash infusion. This is where you see the disconnect between retail perception and institutional action. While many retail traders, perhaps using the Robinhood app for its simplicity, are looking at the 52-week high of $6.60 and thinking this is a buy the dip opportunity, the institutional data tells a completely different story. In the last reporting quarter, institutional ownership in Bitfarms decreased by nearly 13%. That's not a small move. We're talking about major funds, the kind that set up complex trades using interactive brokers, reevaluating their positions. Vanguard Group reduced its holdings. Renaissance Technologies, one of the most respected quantitative funds on the planet, cut its stake. Citadel, another major player, reduced its call options. The smart money is not buying this dip. They were selling before the dip. They saw the expectation that Bitfarms was just a Bitcoin play, and they rejected it for the reality. This is a company facing significant operational and financial hurdles, and the earnings report on Thursday is the moment of truth. Let's look at the chart. This 15% drop today has pushed BITF right back down to its 50-day moving average, which sits around $3.36. The low of the day so far is $3.39. This is a critical technical level. If the stock breaks and closes below this level, it's a major signal that the recent upward trend is broken, and a lot of automated trading platforms, including SoFi robo-advisor algorithms and other intelligent portfolio systems, will likely register this as a sell signal, which could increase the pressure. This is a technical fight happening at the same time as a fundamental crisis of confidence. So what does Bitfarms actually do? It's important to understand the business before you just click Buy on your Fidelity mobile app. Bitfarms is a vertically integrated Bitcoin mining company. It builds and manages its own data center infrastructure. According to its own investor relations, it has 14 operational data centers, an energized capacity of 410 megawatts, and a hash rate of 17.7 exahash. Those are the key metrics. Hash rate is the computational power, and megawatts are the energy to fuel it. But recently, like many of its peers, Bitfarms has tried to change the narrative, announcing it is expanding into high-performance computing and artificial intelligence. This is a direct attempt to be seen as more like NVIDIA stock and less like a volatile miner. The market, however, seems skeptical. TeraWolf, for example, reported $7.2 million in revenue from its own AI services, but it wasn't enough to save its earnings report. The market seems to be treating this AI pivot as a distraction until it produces truly significant income. This brings us to the core tension. The expectation is that a company mining Bitcoin at $105,000 should be printing profits. The reality is that the 2024 Bitcoin halving event doubled the difficulty of mining, effectively cutting revenue in half for miners that didn't upgrade their fleets. The Q2 earnings reported back in August were a miss, with an earnings per share of -2 cents against an expectation of -1 cent. The market is now worried that Q3 will show that even with a high Bitcoin price, the operating costs and the interest on new debt are eating away all the profit. This is what makes online investing in this sector so difficult. It's not like buying Tesla stock and betting on EV adoption. This is a complex interplay of a digital asset price, global energy markets, semiconductor supply chains, and corporate finance. A trader using a platform like Interactive Brokers might be looking at the options chain and seeing extremely high implied volatility, which is the market's way of saying, we have no idea what's about to happen, but it's going to be big. The simple self-investing approach of Bitcoin is up, so I'll buy BITF is what gets investors hurt. So here's the setup for the rest of the week. The future of Bitfarms stock, at least in the short term, has very little to do with whether Bitcoin goes to $110,000 or $100,000. It has everything to do with the conference call on Thursday morning. What is the all-in cost to mine one Bitcoin? What is the status of the $500 million in convertible notes? What is the real progress of the AI HPC diversification? And what is the guidance for Q4? The analyst consensus price target, for what it's worth, is around $4.75, but analyst ratings have been all over the place, from buy to sell. Wall Street is just as divided as retail. This is a moment of high drama. We're watching a company's stock price disconnect from its primary driver, Bitcoin, and get repegged to its own P&L statement. This is what happens when a sector matures. The market stops treating all companies the same and starts demanding individual performance. This is a stock that has traveled from $0.67 to $6.6 in the last 52 weeks, and it's currently in a free fall. Let's do a quick poll. I want to know what you think. Comment below right now, do you think Bitfarms' earnings on Thursday will be a beat or a miss? Let me know. As we wrap this up, the situation is, the expectation was that Bitfarms was a simple high-growth way to play the crypto bull market, a stock you could buy on any investing site and just hold. The reality, as shown by today's 15% plunge, is a high-risk industrial company facing sector-wide panic, institutional flight, and a make-or-break earnings report that has the entire market holding its breath. The easy part of the trade is over. Now the hard analysis begins.